Now it's time for the gem. Good news. Cheery, fun, nice news.
Well,
with David Griscom. Can we do that as an alternative, actually?
What,
cheery fun, nice news with David Griscom.
Buy low, sell high, folks.
Yeah. You should just come out like Kramer one day.
I was about to say.
You should do like, that would be actually Communist Kramer's an interesting one. And so what are we doing? We're collectivizing.
I would love it. I would love to wake up like from a coma in like 5 years, and I look up on the screen in the corner of the room is David Griscom on CNBC with the same hair,
just like
cowboy
like
boots.
smashing, like he's like hits a punching bag. He's like, what's that? The co-op economy, folks.
Yeah.
I'm doubling down on
Those
it.
are fracking stocks in North Dakota.
Just actually being, that's actually funny. Not even taking it like the silly, like, what if it was a communist direction, but just literally David Griscom just ends up as like,
it means
what am I looking at? Exxon's roaring back, everybody. It's called oil. We all need it every day. Ding, 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 ding.
All right.
All right. What's really going on?
I mean, you know, I'm obviously I have to talk about what's been happening this week in the stock market and just generally. I mean, things are looking pretty bad. You know, even Richard Wolff, who's always very hesitant to make any kind of predictions, has been coming out and saying things are looking very bad and very frightening. I mean, what we saw on Monday was a massive crash on the stock market. You know, they actually had to stop trading, which is a very bad sign. And then on Tuesday, there was a slight rally. And then today we saw the crash come in again. And officially, the Dow is in a bear market now, which means, you know, that the outlook is very bleak. And, you know, people are blaming this on coronavirus. And obviously coronavirus is a major factor, and people are right to be frightened by the Trump administration's response to this serious crisis, the failure of the United States.
But there's also the people who just didn't go to work, but they were fine. So that wasn't getting factored in.
I mean, you know, it's definitely... I mean, I'm excited to watch Trump's speech a little bit later. To see
we're going to see that at 9 o'clock.
You know, so anyways, you know, coronavirus is definitely something to be worried about, but I think that we shouldn't let people get away with this excuse. One, you know, people have been worried about the state of the U.S. economy for the past few months. There's been very frightening signs like the repo crisis that happened in September. And also very recently, over the past couple of weeks, we've seen this very incredible and frightening share in the benchmark 10-year rate for treasuries. 10-year treasuries are probably one of the more safe, like the safest investment that you can make. You know, they're very secure. The United States government doesn't look like it's going anywhere. So when you see a lot of people flooding and buying 10-year treasuries, that means that people are very worried. And also when you have a bunch of people buying 10-year treasuries, then the yield, the money that you make back in 10 years, it falls dramatically. So people essentially are just paying to put their money somewhere where they think it's going to be safe, not necessarily to turn a profit. And you see when that's happening, as the stock market is falling, that, you know, there's a very serious crisis when it comes to investors. Now, I just want to hit, you know, the history that's led us to this moment, because they're going to blame this on coronavirus. They're saying that, you know, we were coming, you know, you hear Trump, you hear people even in the financial press saying, you know, we're in the strongest economy. This is the strongest recovery that we've ever seen. And if you've been watching the Gem over the past couple of years, I've been trying to say, it's like, yes, there are some metrics that look very strong, but they look strong for people who have money and power. And we're seeing that that's a smaller and smaller group in society. And it's being the people who do have money are benefiting from this, are doing so on a very shaky basis. So essentially, what are stocks supposed to be? Stocks are supposed to be a right on future profits. So basically, you put your money up front, and then as that corporation becomes profitable in the future, you get paid back, right? Now, we've seen that that's not exactly what stocks represent anymore. Stocks themselves are an investment and are played around and inflated with, and it's gotten to a point where they're very much separate from even any kind of expectation with profitability. We've seen that with the tech stocks, but we're starting to see people wake up for a second and say, hey, you know, it looks like our enthusiasm was misplaced, and, you know, all of this kind of ideological inflation that goes into the stock market, you're starting to see that evaporate very quickly. So look at the recovery that we had. We had this massive crisis in the United States that devastated our economy. And the only way and how we dealt with this was by using the Federal Reserve to lower interest rates, and then also things like buying up the bad assets and quantitative easing. But specifically, let's just talk about what the Federal Reserve did by lowering interest rates. I mean, we've been living through almost a decade of some of the lowest interest rates from the Federal Reserve in American history. Now, what you need to understand is that the Fed funds rates, the interest rate that the Federal Reserve sets, that's essentially the price of money in the economy, right? So that is going to be the baseline on how all of these other interest rates are set. So what's happened is that cheap money has led to cheap thinking. And we've seen a massive ballooning in corporate debt. We've seen basically people taking out, taking out loans so that corporations taking out loans so that they can just buy their own stock up, right? Which I talked about a while ago when we were talking about how bad this corporate debt bubble had gotten. And, there's some liberal economists who say, well, it's not necessarily a bad thing because you can always borrow money in the future. But the reality is, in an environment that we're seeing today, where it doesn't look like the Federal Reserve has a lot of weapons in its arsenal to deal with the downturn, when you have a crisis like coronavirus come into the economy that actually does threaten production in a way that even the most enthusiastic imbecile could not deny, and that's the reality. Most of these people are enthusiastic imbeciles, and they just
talking about Larry Kudlow.
Yeah, I know.
We got a lot happening.
He's a little bit more of a drunk imbecile.
Well, I don't know. I'm drinking vodka because she kills Corona. My Corona.
Sorry. Oh, Jesus Christ.
My Corona.
Honestly, I don't think we're too far off from
It's very important not to panic. Larry Kudlow.
We have contained this. We have contained this. I won't say airtight, but pretty close to airtight. We've done a good job in the United States. Hats off to our public health people. And
coming to a TV.
Public health people.
Coming to a TV near you.
My niece wanted to we said not gonna make any money. Just drink vodka, kill the virus.
Look, you need a healthy amount of alcohol in all your drinks if you want to cure the virus.
Let me tell you something, just this morning, beer's not gonna work. It's gotta be real.
It's be hard. So, the plan to get us out of this crisis, though, was never to reform the economy, to say, hey, it's not a good thing that the United States economy is basically based on speculation and asset inflation, be it stocks or property, right? They said, what we should do is we should just find a way to keep the system afloat, and they just continue to pump money and to allow the speculative system to continue. And what's worse about the situation is now we basically have a decade of speculation propped up by very low interest rates, which means that as things start to get more shaky, when you have these outside pushes like the coronavirus, it puts the entire system in a very serious situation. Basically, to put it clearly, the United States economy has been running for the past 10 years, and chasing it has been this zombie. And that zombie was the original crisis. And all that we've done is work as hard as we can to basically put a little bit of space behind us and that initial crisis, but we never dealt with that crisis because we never dealt with the fundamental problem of the U.S. economy. That is the incredibly unequal society that we're creating, and the complete divorce between profit and productivity. Profit and the actual function of the economy, which should be providing people with goods and services and things that are necessary. It's all been this kind of game to try to find ways to make money off of money, and it's catching up to us now. I don't know necessarily what's going to happen in the next 2 weeks. I'm not in this kind of game of making predictions in that sense. What I'm trying to provide people is an understanding of the ways that the U.S. government, the Federal Reserve, basically institutions that are supposed to be looking out for us, have acted over the past decade, so that as we see economic crisis, you can understand it and be prepared, one, for crisis, and two, to start making the argument that we need to be making. And that argument is that the United States economy has been in crisis for decades now, and that if the federal government and if the Federal Reserve are going to be involved, they need to be getting involved in ways that help out the average person. Instead of spending all of this money trying to reinflate asset prices for a very few investors, we should have been, all the way back in 2008, trying to say, we need to spend this money for the benefit of people. So that means doing things like a Green New Deal. That means investing in massive public works projects, investing in a jobs guarantee so that we can actually push up the wages of the average American instead of putting a wider gap between the richest and the working class. If we don't deal with this and we continue trying to find, tricks and if we continue trying to allow basically technocrats at the top to try to find tricks out of a crisis that has been ongoing since the beginning of capitalism, but has really become articulated over the past 30, 40 years, it's only going to get worse. It's not just the United States, it's Europe, it's Japan, it's all of these massive industrialist capitalist societies are all facing the same decline. And if you start to see that across the board, you need to start asking yourself, well, is it a temporary thing or is it these systems? And I'll tell you right now, friends, it's this system.
How do you say that about Donald Trump economy? When more Dominicans are working in the history of the country.
I love how we always have those stats.
We have more. We have more Puerto Rican people with one arm working in the Bronx than has ever happened, and that's the Donald Trump economy. You just watched a Michael Brooks show video. Subscribe to get them all. Why wouldn't you? Don't be foolish. Click subscribe below and become a patron as well. Patreon.com/TMBS. Thanks, everybody.